Welcome to Short View Trading, your morning market hit for Monday, 8th of November. What matters today and this week for traders? Well, what a week that was, not only for the S&P 500, but across the broader range of US equity indices. The S&P, though, closing up on Friday for its 16th up session in its last 18. Quite an extraordinary feat. Equally, the Nasdaq better on Friday, although only just. But more interestingly, if you look broader across US equity indices, some extraordinary gains last week, some parabolic type price action. Look at the Dow Jones Transportation Average, up 6 and change on the week. Similarly, the S&P 600 small caps up over 6% on the week. And then the standout performer, the Philly stocks, over 8% higher just on the week. Look at the chart in front of you now. That is parabolic type price action. It often occurs as we have a blow off top. And of course, all of this is occurring after a very strong October into early November, with markets being helped by not only a dovish Fed that reiterated its dovish stance last Wednesday, and in fact you saw that in the way the interest rate complex moved sharply lower to reflect less hike expectations further out. But not only that, but also of course very good earnings from the S&P 500 over the third quarter earnings season, whereby we saw a beat that was almost 10% above expectations. Normal beats 3 to 4% on the S&P 500. So very punchy beat, but now 447 of those S&P 500 companies have reported, and the earnings season is therefore largely finished. So the interesting question is what comes next? And intriguingly, on Friday, we saw a pickup in volatility. The VIX ticked higher, despite the fact the S&P 500 closed up. The VVIX also moved up from very low levels, the VVIX being the volatility of the VIX itself, and often a precursor to some weakness in equity markets. Added to that, bond yields, 10-year bond yields behaved very strangely last week, or perhaps not so strangely given what the Fed said, but certainly strange in the sense that they moved dramatically lower over the course of Thursday and Friday's trading session, as you can see on the chart in front of you now. And indeed, despite that move lower in bond yields, tech on Friday wasn't the leadership sector of the market. It only just squeezed higher in terms of the Nasdaq 100. So all of this means the next couple of weeks should be pretty interesting. It's been a very strong run since the early October lows, and markets have moved an awful long way. But of course, with that, our models are much higher. You'll see in front of you now, for example, the put to call ratio, a clear sell message. All sorts of models, whether it's risk appetite, technical models, other put to call ratios, fund flows, all of these models got a very clear message at the moment, and that's very much a sell message. Indeed, we update all of these in our daily rag, available to subscribers via the website. Please do click on the link below. Equally, if you'd like a free trial, 7-day free trial, all you need to do is put in your name and email address, no credit card details required. And in that daily rag, we update our view and how we recommend traders should approach this market on a 1 to 2 week basis. So what are we watching today and this week? Well, US earnings are largely finished, so that's less of a feature, but there's plenty going on. There's plenty of Fed speakers, including Clarida later today, other central bank speakers over the course of this week. In terms of geopolitics, we've got the Chinese 6th plenum, the Communist Party getting together, probably to elect Xi for another term. That seems what's likely to happen, but that'll be watched closely. Elsewhere in China, some quite key data out, including total social financing and money supply data. This is the monthly lending data that gives you very good insight into how much stimulus they're putting into the economy. Across the globe, we've got CPI, lots of that on Wednesday over in the States, also in Germany and in China as well. On top of that, lots of bits of US data over the course of this week, including JOLTS, job opening data, and Michigan Sentiment Survey on Friday. So that's it from us. That's your morning market hit for Monday, 8th of November. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under Short View Trading, click on the subscribe button, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.